It's the weekly 30-30 trading list on the ASX. We're looking at the 30 best momentum companies over the last quarter and the 30 launchpad stocks. They're the companies that have had best improvement in momentum over the last week. Gary Glover has been through both lists and pulled out his favourite charts to walk us through. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
It's exciting times. It's going to be our last recording for a little while, but we've got a decent list. And as you've been telling me the last couple of days coming into this recording, there's some good opportunities, a few coils happening, got a fairly active watch list and positions. So how are you seeing the market right now?
Yeah, I was sort of hoping to, go away and, travel light, but all my positions were really just sort of coiled and sort of tightened. So they haven't moved against me, knocked me out, and they haven't moved for me and given me some breathing space. A lot of them are tight there. Got a couple running pretty hot, so I'm happy about those. I'll just sort of maybe try and edge my stops up while I'm away, leave my target open there. But I was hoping a lot of them would have, got out of the gates, and then you got a bit of breathing room, just sort of you stop at break even, leave your target on there, and then let the market do the rest. What do they say? Pick right and sit tight. So we're just going to have to watch a couple more days closely for me, and hopefully moves in my direction, and then hopefully I have picked right. So, but all pretty good. So looking at this list there, so interesting list there, a few things on here, a few lessons in here as well. So, number 4 on the list was City Chic. I think we sort of spoke about this one here. How I guess the volume was pretty light in this period there. So I think it was we saw a few little consolidations there, pretty light volume, had a bit of a burst again, pulled back again. You can see that little congestion there. And there's no selling coming in. So it's always a good sign, actually, when you start to see them bursting up here, a good volume, pulling back a low volume there, that's when they sort of can go a little further here. So that's ideally what you want to see there. TNC was sort of a new one here, so one to keep an eye on. It just sort of had a little bit of a squaring off here, and then it has sort of popped up out of the range there, Chris, and on some pretty decent volume there. So I don't know much about this one here. Actually, just looked at this chart this morning. That one sort of told me to go and have a look close at that. LOT here too, there's up until maybe the last 18 months here, I would have traded this every day of the week. I did see this sort of news come out there, sort of, Mineral Resources, sort of, almost sort of JV there. And I thought it might be one that actually run there. So it did actually sort of pop and run there, but I just didn't trade it because it's not in my playbook anymore. So I'm trying to be disciplined, trying to stick to my rules there. Don't trade everything and everything there. But it is one that had sort of cobbled up a little bit, and then some news out of left field. So when you get some really good news, I think we sort of spoke to in the past there, some game-changing news which market didn't know about. That's sort of something which can move the needle. So can it move the needle? And I think it opened around 4 cents. I think those trades that were 3.6 were actually on the other exchange, which you could trade anyway. So I think it went from 4 to 6 cents, which would have been a nice move for a day trade, but that's all that is for me. I'm trying to move away from that, trying to be more disciplined and just trade the leaders and the sort of stronger stocks here. BAT I thought was actually pretty interesting. I thought this is actually pretty firm here. Love the fact that we had a pretty impulsive move the first from sort of February, March, April, pretty good volumes. Pulled back there, the volume drew up, and then we've seen some pretty decent volumes all the way through here. So the stock's sort of building. BAT, so actually really good volume, good depth in there. So this is definitely one here to be looking for those pauses. So looking for those consolidations, looking at a little flag or pennants. So saw a little bit of a pullback in here, and it sort of there wasn't too much volume through here. Did pull back. Did see a little bit come in, but that's all coming in at the end of the move after the pullback here, and that sort of started to stabilize again. And again, you get that, you get the sort of few decent volume days here, it's going to sort of keep going here. So POT is definitely one to sort of keep an eye on there, just because there's really good breadth in that move. It does look pretty good there. KAI, I thought looked okay. Some good volume on the first move. Bit of a pullback on lighter volume. Volumes come back in again. Probably a little small for me. LRS. Again, a pretty nice trend here. Just thought this one here was sort of starting to see some volume starting to come in here now. So there was some heavier selling here up into the high. A few heavy days down here. A bit lighter on the rally. Again, a bit heavier on the selling here. So this is telling me to be pretty cautious here now with this one. This is not, in terms of those sort of stocks that have run hot and then continue to run, they haven't done this. They've actually done the opposite to this. They've actually sort of had maybe 1 day of selling, and then the selling has dried up. It hasn't been aggressive. So the volumes come back in again, maybe spiked up into the high and then dried off. Maybe 1 day of selling and then dried off completely to the point where you almost see the volume disappear on the pullback there. So you're more likely to want to sort of see really light sort of volumes, So that's telling me to be careful of that one there. It's sort of definitely one on the list that I don't necessarily like here. Thought SDR is a good lesson here, Chris. This is this is sort of SiteMinder, and it's already had a good run here. What I want to try and show here is that this is sort of a move here. See how made a false break of the low, sort of down in this sort of June here. So I'm going to share sort of one of my sort of trading sort of secrets around these sort of false breaks is that when they do go to a false break here, then the measured move is to go to a new high, is to sort of break go to the previous swing high before that. So it's a fairly decent move here. So you're talking about a move from 270 up to 435. So it's a pretty big percentage sort of gain there. So sometimes they don't get there, but a lot of the time they do. These false breaks here, when they do actually when they do work here and move off here, this is the sort of target there. So it's a great risk reward trade. That's the reason why I love that sort of trade there. But oftentimes they might get to that level and just go marginally above, and then that's when they retreat. So for me, that's now fulfilled the target of actually getting to that level. And as it was, I only went there for 1 day and sort of reversed there. So that's sort of telling me just again, it's done its done its measured move here. Now it's probably going to sort of consolidate here. So but great pattern to trade here. Great one to look for.
So that was a marginal new low or a false break, and then you were looking for a marginal new high, only temporarily. And that's enough to get the trade through.
That's right. So I've seen patterns like this before. You see it on I guess the index, our index can expand and stuff there. So if you think in terms of Elliott wave sort of terms there, think about like an expanded flat. So like so sometimes your fourth waves can be expansions. So they can sort of like you get a little A, B, C will expand, margin your high, margin your low. But this, even your Wyckoff as well, sometimes they have that washout and it goes back to retest the previous move as well. So there's a lot of, different theories around movements which do support that type of larger move as well. So just a pretty good pattern to look at there. So that, look, at some stage there, you probably want to run a stop there. There's no method there which is going to work every single time here. But the beauty of these sort of false breaks is there's sort of, I think if you're not sort of drilling down into the too small end of the market, and more sort of, at least sort of mid cap and above there, then you can get some decent sort of moves in there, decent percentage moves. So that's the reason I sort of do like that pattern there. So I'm giving away a few little sort of secrets there, but yeah, hopefully someone can learn from that, make some money here. Thought FCL is sort of one that has run pretty decent now, so looking a bit long on the tooth there. I guess it's just, I'm just looking back here, looking at this sort of tight congestion here under the high, Chris, sort of there's that sort of classic pattern that I know you and I have been talking about this sort of pattern over the week, few stocks and stuff there. there was there was a stock in the US there. I think it was so this was the American semiconductor. So I had a little VCP in there, but just that sort of stock there, how they're sort of starting to congest. They start to sort of go up in their highs there. They're sort of congesting under the high, and then they eventually sort of pop through here, and then we get another congestion and it popping in. I think we're talking about CXO going back a while here now. Maybe I might have to go back a couple of years ago, but it's just there's that sort of pattern there that we look.
I think it was
21, is it? Oh,
Yeah.
okay. Yeah. Oh, that might be it there actually. Yeah. I see that. That was a big move, big percentage move there. You can't sort of see it in the chart there, but we'll give a drill in there. But it's really decent sort of size, decent size move here, and pretty decent volume too. So that's sort of, it's probably gone from 30 cents here up to 50 cents there. So it's a pretty decent sort of pretty decent move there. And then we sort of had this little tightening there, and it just starts to edge up and tightens up under the high, and then you get your move there. So you and I have been talking about how do we program that. So how do we look for stocks that have had a strong run and then go sideways and then pop through there? So we're coming up with a few ideas, but we'll work it out, I'm sure. But that's really what we're looking for. That's just that sort of cracking pattern there where you sort of you have a strong move and then pull back, but the market holds up pretty well. Then you sort of threaten the high again, and you sort of keep congesting on the high a bit, and eventually you pierce through it on some volume there. The volume profile really shows it, and also the stock sort of doesn't show too much weakness as well. So that's the kind of not the holy grail there, but that's what we we can sort of keep identifying those things over and over again there. That'll give us some really trades there. I thought ORR was pretty interesting. Little thinly traded here. Had a bit of a pop up here, maybe up and handle there. The only thing with this one is it does sort of have some history of sort of running up and easing off here. The only thing is we do have a bit of a chunky volume sort of coming in here, but tricky one to trade. Maybe Bunting's had a nice move here, Chris. This is I was just checking the list the other day actually of the dogs and the Dows. This was the first one that we covered. This actually has had the biggest move of the 10 that I sort of chose. That this one actually had the biggest move. So I think it was up 20% there during the week. So it's probably up a bit more now. But yeah, some pretty good volume through there. The only thing is, sometimes when they sort of run, you can sort of see when they run up here, they can sort of spike up into a bit of heat. So when you sort of see that run, and then you see the big volume bar, that can be a time for it to pause. So when I sort of see something like that, and I'm long some of these sort of stocks, I probably would trim some of it into it, like just sell maybe a quarter or something into that heat there, and then hope that it eases back again, that I can reset some of it. But again, you saw that, big spike here, and then it sort of ease off a little bit, So did see it sort of spike yesterday again with a move. So the question you got to ask yourself when you sort of see the volume pick up like that is, can tomorrow be even bigger? Because those are the sort of, sometimes I run into that, sort of scale into those bigger dates, and that sort of cools it off there. So I think, if you question whether the next day can be bigger volume there, that might be when you sort of get the little cool off, a little congestion there. I thought SYM was sort of interesting there, but unlike a lot of these other little pauses here, you see there's little congestions in there, little congestion in there, little congestion in there, even this little congestion there, all those with no volume. So they basically run up, congestion, no volume, run up, good volume, then congestion, no volume. This has had a bit of a spike here. And now the volumes are a little bit more elevated. So it's still can have another move up here, but because we're seeing a bit more selling here now, sort of puts the trend at a bit more risk, Again, we keep highlighting here that some of those bigger moves like the AW1s, the AZSs, which, look at that AZS, that's breakout. that sort of, each sort of, each pullback has sort of been on pretty light volume. So even even this sort of day here, very, very high volume. So it's just, maybe one day of selling there, but they just sort of, they really dry up the volume there. So, only one on the list there. I am. So deep yellow actually was one that I thought I looked pretty good. Actually, I did cover this in my report here. I just love the fact here, if I drill into the weekly, we had some pretty good volume. Off this low here, we had some really heavy, we've had 1, 2, 3, 4, 5, 6, 7 weeks, pretty robust volume all the way up into that high. And then we've had a bit of a pullback here. Look at the volume there, it's probably, half, or maybe even a third of the volumes on the way down here. So when you got volumes that are 3 times stronger on the way up, and they're pulling back here, this is nice and tight price action there. It's like a little kind of sort of flag here. It's sort of, this is a classic sort of consolidation pattern there. So what we're looking for on the weekly, when I was looking at this, I was looking for evidence that this congestion is going to turn and break here. So that's what our weekly chart sort of tells us. That's why sometimes you look between dailies and weeklies to sort of see what's happening here. So really, if we're drilling here, we're waiting for this to sort of show something can turn here. So I was looking at this probably back here because I thought, oh, maybe it's going to hold the 50, see what it does here, but it never really showed anything. This was the first day we saw a bit of volume come in there, and the second day we had a bigger volume. And if you've been following my work for a while, you'll know that I love to see the B wave break. I love to see a little swinging high break. So that's my first really, so I don't really touch this until I sort of see this. So I did see the volume there, and I saw this early coming in. So I did get a little pilot by around 70. But then once I sort of saw this volume through, and once it started to break the B wave, I did sort of add to this.
So is it important to you to break the B wave with volume? Was that kind of even more?
100%. I mean, I can tell you I've bought plenty of stocks here waiting, anticipating the B wave break, and to be a few hours later, see it ease off and then not break above it and realize, shit, I haven't, it's not going to go above, and it'll fade and congest a bit more. So that's happened to me quite a few times here. So now I sort of really, I really want to see the volume coming in there, Chris. So really, if I am going to sort of cheat a little bit, I want to see sort of good reason to be, cheating there. So what was sort of happening there is that if you look through the sector, so we had Paladin there, and look, I was getting access to some of your work here, which was sort of showing that uranium was one of the leading sectors as well. So it was showing some relative strength versus the market. You remember the market's had a pullback here the last few weeks, been a bit messy. And so this sector's been really, really robust there. So Paladin's been robust. BOE, been robust as well. There was EL8, which is a small one. Just, if you go through the whole sector, you're seeing the whole here. And I like the Bannerman, when I saw the Bannerman, look at the weekly chart here, and look at that. That's a big corrective decline here, overlapping. And again, we sort of come back to, bit of a key low, sort of technically. Had a bit of a positive move up here, and then this was sort of corrective there. So again, if I drill in here, you can sort of see there was some good volume on this rise there. And look at that volume just dry up here. That's what we want to see. We just want to see these little congestions there. So we're looking for these sort of, exactly, the tight coils there, and then the volume start to come in again. And so drill into your dailies, and then you're getting, this was looking quite nice there. So once we broke above I think 160, little page in front of me here, but once we break above that level there, I think it's 166 there. I did buy a little parcel of this, little starting parcel. Did give a little shake there first day there, but that's what the market does. There's there to test you, and that sort of popped here. But look at those sort of weekly charts there. They're pretty good. So it's hard there that these sort of uranium stocks, they can disappoint you regularly. So you definitely got to have your stops in place. It's like gold. Yeah, I noticed when you trade gold, you can get stopped out. Good setup. It doesn't work. Good setup doesn't work, and then good setup, bang, off it runs. So it's sort of like that type of nature of it. So, but this is probably a really good setup here. Just when I'm seeing good volume, good breadth. I think the Uranium chart as well is pretty strong here. It's all congesting under a ceiling as well. All the stocks are all a bit of life there. And you can sort of see, although, I think our Aussie guys are, so far away from, anything happening here in Australia, there can still be there's a lot of demand for uranium around the world here. So it can still be shipped off elsewhere, for a good price here. These guys can still make some good money here. So it's just interesting here that sector is definitely sort of moving there. So, definitely want to keep an eye on there. But normally sometimes they just have these moves and then that sort of fades there. But I don't know, there's actually some pretty good breadth to this move here so far. So maybe this one could be a little larger than other moves in the past there. That's our quarterly momentum. If we look at our weekly list there, got a few little movers there. SPQ was sort of number one on the list. I thought that was sort of interesting there. Probably a little bit too small for me, but has sort of turned up out of the, up the 50-day moving average now, just sort of congesting there. But again, probably too small. Next Science was sort of interesting as well. A little bit of a BCP in there, Chris. But I did like to look at this. But then I did hear on Osbis someone mentioned talking about ASIC had to please explain with the company and so on. So I tried to look that up and find. I couldn't find that. So I left that alone there. When I sort of hear things like that, I thought, okay, maybe I misheard it, but I'll stay away from that here. But there's a BOE. I mean, that has a classic sort of consolidation pattern as well. Yeah, nice and tight there. So again, you just got to be patient there. Wait for your little break here. You can see this day here. That was pretty good volume. So after all this sort of light move here, and if we drill into our weekly, we can sort of see that, this whole thing sort of sat on top of the previous sort of move as well. So just nice little tight consolidation. We're after there. So we want these leading stocks. We want them nice and tight, holding there, showing relative strength. And then we're wanting to sort of follow them once they break out there. As I mentioned, EL8 was pretty good. I mean, some good volume in there. A little small here, but now we have sort of broken the B wave. We have some good volume down here. I didn't trade this one here. I was tempted to. I thought once I've sort of had a few positions out, it's hard to get, like Uranium's a difficult one. It's hard to recommend clients to sort of trade this because it's pretty speculative and they got a history of coming back. So I wouldn't recommend it personally. Sort of too many clients there just because they sort of do know, but they can bite you. So you need to be able to sort of shift and move quickly. So you need to be able to look at it day by day, and But yes, so far it's pretty interesting. So it's not too bad there. CTT was on the list. I think HHR was on the list there. That I had a couple of clients actually asking about satire there, it does have some history around that 50-day as well. So you can see how, I was talking about this client actually on this day here, and it didn't look so good actually. I thought, but I guess there's not really too much volume through there. So I was looking, but I think this was coming into reporting season. So, it's a brave man to be sort of seeing it pull back to the 50, and then you get your reporting season. But I guess if you see your reporting, if you do get a good report, then it has bounced there. It's never too late sometimes to sort of come in here. So maybe you drill into your little half hourlies and try and get an entry with a tight stop here. So, I think if it opened at 307 there, you'd have to allow for a gap fill, maybe 297. So, maybe have your stop in at 290 there, maybe starting position there. But you'd need enough move to fit your risk reward as well. So it makes it a tough trade sometimes. So, you can't take every trade there. It's got to meet your rules. It's got to meet your playbook. It's going to be a risk reward element there. But I mean, I didn't mind it here, but it's yeah. I think you've seen here reporting season that reporting season can bite. So I think if you can navigate reporting season without getting bitten, you've done a very good job. So I know you might sacrifice maybe a win or two, but if you don't get smashed or don't catch something which sort of gaps down as it underwhelms there, then I think you've done pretty well. I'm pretty smart. There's plenty of stocks in the States there. I think I saw there was 2 yesterday, Chris, that reported. One was up 15%, the other was down 15%. So yeah,
surprises on both sides.
Yeah, so we had both of them, which plenty of traders did. You're pretty much square for the day thinking, so, but yeah, interesting. But I guess it's sort of sometimes better to be avoiding that. I personally, one thing I do look for reporting season there, and we saw it with Combank, quite interesting here. So Combank actually pulled back into the report. So, my observation over the years is that, how the stocks trade into the reports is sort of can be a bit of a takeaway as well. So oftentimes you run up really hard into the report and it can be a cracking result. That's sort of like by the Ramsell tax thing sort of come off. So I was expecting Combank to run up into the report and maybe disappoint. Everyone get a bit too optimistic, but it's like you go to 108, 110, then it will come off, which happened last time. I think this was the last time it reported up here that it sold up pretty aggressively. I thought it might do something similar, but the last 4 or 5 days it sold off into the low. I thought, well, okay, maybe, I don't think the result was that, although it was a $10 billion profit, the numbers weren't, there was nothing in there that was new. If anything, probably that might have been slightly under a couple of analyst numbers there. So, but I guess the market sort of thought, okay, the market's pulled back. Yeah, nothing too bad in there. It's an okay result. We can buy it, and it's sort of gone up and held up there. So I think just watching how the stock trades into its report here, maybe that, the fact that CTT had pulled back into the report, probably a little bit fearful, a bit worried about what might be coming. And then, the markets are nervous coming into the result, and it's sort of priced in a lot of that fear already. DUR, this is the one that's been trending for a while, Chris. Look at that, how tight that is. I mean, geez, look at that, 50-day moving average is just sat along it. It's just hugged it the whole time, So,
phenomenal to see that consistent, isn't it?
Yeah. It's just sometimes boring. Sometimes boring is good here, if you're willing just to sort of sit here and, keep buying them back here. So again, it's the leading stock being, relative strength, healthy volumes all the way through. So not seeing any sort of, any selling of the pullbacks there. So, you just sit there patiently, wait for your little congestion. Pulls back to the 50, you sort of taps along. Just give a bit of, always going to have your sort of stop in there somewhere. But yeah, that just goes to show that pretty interesting one there. DUV had a nice little move as well. It's not too bad. There's some good volume coming in up the lows off these sort of recent rallies there. So a little small there, but it's quite good. 88, sort of interesting here. I mean, this has been I've traded this a couple of times there, Chris. It's, it's got a bit of a volatile nature about it. So it's a bit like net wealth there, sort of pop up and come back, pop up, come back. So you've sort of, that's why sometimes when you're looking at stocks there, you need to sort of do your homework on sort of stocks and learn their personality a bit. Yeah, but I did think this was interesting here. That on our weekly chart there, we've sort of got a possible sort of cup and handle at Chris.
Yeah.
So, it's been pretty firm here so far. So yeah, it can, we saw this. Obviously, maybe a deeper one here, probably not, maybe a double handle there, but once it did pop through there. So, but yeah, this not looking too bad here so far. Just is a bit of a volatile share there. So, this is, for me, this is sort of one that I would be sort of, taking some on that sort of trade move there. DMP, I thought, this is pretty interesting here because it's sort of, again, we've sort of got our 0, 1, 2, 3 in here. And if you look at that sort of stock here, so again, come back to the 50-day moving average on that point there. So Now you might think, oh, Gary, that was a pretty scary day. I'm not sure that was, I'd probably want to sort of see a support here. Okay, so yeah, which is true. Okay, but also, yeah, again, another little secret here. This is sort of anyone who's sort of read Wyckoff is though. So you see here on that day, see how the volume is really light, Chris. So that's a wide range day down, and the volume was still very, very small here. So
That's
when you get
reflecting the amount of movement in the market.
No, that's right. So Wyckoff's sort of theory will say, okay, if we're heading down, we have a wide range down like that, then that should be moving through multiple price levels in the market. So the volume should be above average. Shouldn't be, So if you get a wide range day where it moves through a lot of traffic, then it should be bigger volume. So Wyckoff theory says it indicates when you see something that you shouldn't see, that's more revealing than what than stuff that you should be seeing. That makes sense. So
a tracking anomaly.
Yeah, so it's an anomaly there. So this is the one thing we're seeing with the market so far this year. This is sort of why I've been sort of confident about the market climbing here, is because every time the market's sort of gone up, there's been reasonable sort of depth. Everyone sort of early on was talking about market breadth not being enough stocks according to the market, but that's not how it starts. It doesn't always work that way. So early stages of the bull market start with the leaders and then it filters through eventually. And over time, that sort of builds. But when we're seeing the stock go up on pretty good volume and the market's going up with volume, and then on the days it was sort of pulling back and selling off there, we weren't seeing any volume there. And this is the same here with this dominoes here. This has sort of come back here, pretty light volume there. So if we went back and looked at dominoes, this is why sometimes, the better traders will go and do the homework for us. So if we looked at dominoes here, can't really sort of see anything in the last year or two about the 50-day, just sort of tend to chop through it. But if we go back, say 4 or 5 years and look at the dominoes chart and look at when it's trending up, that 50-day moving average, so many good touches, so many pullbacks hit that level. So the stock's got a lot of history of bouncing off that 50-day moving average. So again, every stock's got its own personality. It's like, every single person gets out of bed every day. When they put their shoes on, they put the same shoe on first every day, the same habit. You probably don't know which one it is, but you do the same every single day. We're all creatures of habit, and stocks have their own habit as well. So go back, and sometimes you have to look through like 10 years of data and see some sort of habits with the stocks. They see whether, it's like mining stocks will have a habit of pulling back deep in the range, so they'll pull back maybe 3/4 of the range. So like BHP Rio stuff there, they often will come back like 75 or 76% of the range. Whereas like a lot of industrials, like a bank stock, will only come back maybe 50%, 61.8, maybe it's a big move. So you learn the personalities of each sort of stock that you trade it, and you'll sort of see that. But Domino's has got some history of the 50, so that would have been telling you that 50 is a good guide here for Domino's once it starts trending. And that's moved up here. We've got a 0, 1, 2, 3 pattern that's been building from there. So that looks quite interesting there. One stock that looks kind of similar to this, which I saw yesterday, Chris, was, again, we've got a 0, 1, 2, 3 here. And this whole thing's just sort of sitting on top of our little last swing high, and just come back and sit on top of our 50 there. And again, if you go back and look at Ramsey, so you go back and look at, the last year's probably not a good guide there because it's obviously been trending down here. If you go back and look at Ramsey historically there, 50 does have some sort of history around that 50 there. And you and I sort of know that when we see that his moving averages crawling together, that's pretty interesting as well. You can sort of see that when they all tighten up here, it's when you sort of can get a move here. So this is a pretty interesting level here. The reason I like it is actually, if it's like dominoes, then it shouldn't really, if that's our low there, we don't want to see it break the low there. So it's pretty tight stop here. This rallies up here, maybe goes back to 62. So 57 or 62 is $5 here. We're probably risking less than $1 under the stop here, so we'll probably get like a 6-to-1 risk reward. That's in my wheelhouse for me. Look, no guarantees here, but it's just sort of similar setup here. And yeah, those are the things we're looking for. It does pay to sort of go back, look at those stocks, and see their sort of inherent personality. Little BCP here, Chris, on Linus, just a little tight one here. coming off the lows there. Look, there's a little, probably a bit early here, but some okay volumes there. Nothing too outstanding here on the weekly there. Still got a bit of a congestion pattern here. This might be a little corrective pattern there, but yeah, just sort of something to keep an eye on, that little BCP. I mean, there's so many stocks here in the same sector here at the moment. Yeah, BHP, little BCP, S32, little VCP, all the tightening action in there. I mean, even EIU, gold here, that's all tightening up. There's so many sort of mining stocks there, and across multiple sectors as well, all just coiling up here at the moment. So, yeah, no, pretty interesting stuff there. Thought this one, Elders, pretty interesting. This is on the list as well, sort of number 30 on the list. And again, if you go back and look at the history of Elders, interesting here, this one here, actually, it sort of has a lot of V-shaped lows, some deep sort of lows there, but it does tend to sort of run up, come back, run up, come back. Even sort of, off the low here, maybe a bit of congestion, maybe pullback. It does sort of come back, and even sort of building off the lows as well, does tend to sort of do these sort of quick fire runs and then pull back sharply here. So we know that the personality of Elders is that it can easily rally, $2 or $3 here, but then it can come back 3/4 of the range and maybe sell that. And if you go back and look, I went back and looked at this sort of 20-year data, probably 75% of the time, it'll come back 3/4 of the range after it sets up. So the safest buy is actually to buy the first higher low off the low. But the first lows here, coming off these first lows here, they can have a decent move. And just this little, looking at the daily here, when it runs like that, and then it sort of congests on its side, it can run the same sort of move here. So it's a bit like this here. You run up, just on its side, and then pop up, and then you move following it there. So can get these sort of upward sloping congestions. That's sort of something Bill McLaren did talk about in his sort of teachings there. That's pretty good volume through there. And so far it's been sort of nice and tight here. So this could easily pop here to 8, come back down to, maybe 650 or 660. So first high low and then go again. So just knowing the personality of these sort of stocks here will sort of, just think about your friend group. Think about your closest 5 friends there, the different personalities there. You kind of know their characters, what they maybe what they're going to do before they do some of the time. So, it's the same as stocks here. If you go back and look at them historically and learn, there's definitely a lot to be learned there. So, but yeah, that's it there. It's a pretty interesting list there. Quite a bit happening there. Definitely think the resource sector there is. You got to think there, Chris, too. I was talking about a trader there. We've had bad Chinese data. Commodity prices have been weak because that US dollar has been pretty strong. But they're all just congesting. So in the face of bad news, obviously think about this. This is the, obviously BHP is sort of one of the leaders there. So in the face of all this sort of, China soft data here, weaker commodity price, strong US dollar, a lot of negativity around the sector here. Whole thing's just coiling up here, tightened up here. That's the sort of corrective decline here. So, I love seeing stocks that hold up really well under bad news. I'll be watching. Fortunately for me, the first couple of days of my holidays, I'll probably be watching really closely the market. So, yeah, that's okay. I love it.
Well, it won't be a break. It'll be a trading holiday. It's as you said, there's a lot to look at here across the commodities, different sectors, a lot of coiling, 0, 1, 2, 3s off the bottom, still with some compressions, some good risk reward trades in the mix. So a lot to watch in the next couple of weeks. And by the sounds of it, your portfolios, you're pretty well invested going into the holiday. So
a little too well, Chris. Probably should have been a bit lighter off, but no, that's right. I think it's you've got to put your where it's at the one rule actually is this kept hitting home me. Actually, it's probably, I think it's going to be my favorite quote for the rest of 2023 is to pick right and sit tight, because I picked a lot of right stocks here, but I haven't sat tight enough. maybe overtrade them a little bit. Got out a little bit too early sometimes, so got to be patient there. So hopefully, maybe me going away a little bit can add a little bit of patience here. I've got my stops in place, so if it all goes all haywire, then I'll be stopped out. I'll be in cash by middle of next week. If it all goes up, goes higher, then all I need to do is maybe edge up a few stops there, up the break even there by by the end of the week. So fingers crossed.
Well, you've shared some secrets with us, and when you come back, we'll find out whether you were able to be right and sit tight.
Yes.
Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned a lot of trading strategies, 0, 1, 2, 3 bottoms, VCPs, false breaks, etc. We pulled out some previous interviews and dissected those strategies, whole playlist on the right. Gary's usual Tuesday interview that we won't be doing next week. There's a whole series over there where he talks about his portfolios he's running for clients and his trades for the week ahead. And finally, his Twitter handle is over there on the left-hand side.